Hey everyone, it's Nick with Us versus Herd. If it's your first time here and you like the content, hit subscribe if you want to get notifications for when we go live, tap the bell, or when we post videos. If you want to join the UVH fam, of links below for our free options trading group along with our Discord. If you're here right now, say what up. I see FC, Sovan, Jeff, Tan. What's going on? Jimbo. What up, what up? Just getting back into the swing of things here. We'll see if anyone shows up if you guys forgot about me. Francis, hey. What's up? Yeah, I haven't gone live in like a week. Was out. Haven't actually posted a video in about a week either. But yeah, I went to a Drukpa, what's up? I went to Mexico, hung out for a bit, took a nice break. I mean, I was going too hard for a long period of time, like months. I was going hard for like months and months with work and trading and YouTube and everything. Hey, Randy, Billy. And was feeling the burnout. Then we had the negative 50-degree days and the negative 20-degree days here in Chicago, and it just, you know, sometimes I guess you reach a breaking point. You know? And negative 50 was that breaking point. Yeah, Billy, we went down to Cancun, hung out. Sylvan, I own my own business. So, anyways, if you made money today, comment got paid. If you lost money today, comment learned a lesson. I was just getting back into the groove. If you're here right now, say what up. Definitely want to meet you. Today pretty much I went in low and slow. The market closed flat. SPY closed flat. I mean, obviously there was a lot of intraday action, I would say, more to the downside, but you know, SPY only closed up 0.02%, which is crazy. When I bet people were thinking that we're gonna have a big update, but while I was gone, I mean, if we're looking at, we'll come back to AMD. While I was gone, we did break above it was a slow grind up. We broke above we hit a high of today of 284.36 before closing at 282.40. So it was like a $2, you know, pretty much a $2 drop there. I had GS calls too early. So Vaughn, I was actually looking at the 200 put on GS today, and I didn't pull the trigger because I was like, it's not going to go from 206 down to 200. But lo and behold, GS closed at 201. You know. But going back to SPY, you know, what we were looking at was like the 281, 282 area, and it got rejected a few times here, but then we had a slow grind up the last couple of days. Let's see here. I was gone, so I was just getting caught up too. So it went from 280, 282 got rejected. We went up again, 282 came down, and then we had you know, even though it hit 284 today, I mean, this 281 area is still a problem, you know? It's still a problem because somehow we just keep gravitating back towards it. You know, we broke above, comes back to it, went below, comes back to it. It likes this area. So, hey Nelson, how you doing? I mean, what do you guys think? Are we going to be going back up to the 290 areas? We're pushing above now that we're kind of a little bit above the fold. I mean, we try to have a breakout day to day on SPY, but you know, it's just the I mean, I don't even know if we should bring it up anymore in terms of the trade talk with China, and you know, like they're saying the market moved down to, because of the trade talks on China again. But I mean, like, does Wall Street even care about trade talks with China anymore? I mean, right now it seems like the tariffs are just going to be indefinite, and we're just going to coast the way we've been coasting. You know, I mean, I don't think we're going to come to an agreement anytime soon. For some reason, the market keeps reacting like, oh, they're going to have trade talks are going to start. You know, the market goes up, or it doesn't look like they're going to make an agreement. It goes down. When we're not really, you know, what's actually the valuation of the market? Does, you know, no after the no trade news? Yeah, but we never had a deal. Is all I'm saying. We've never had a deal with the trade news. There's been no trade deal with China. The only thing that we have said is like, hey, we're gonna stop doing tariffs. But if China looks like it's gonna like back out on the deal, I guess it depends on what game Trump is playing here. Is Trump playing a game to close the deal before the next election, or is he looking like, no, I'm gonna press these guys hard. We're gonna make sure the deal's right. We're gonna make sure that, I don't know, whatever the deal is. We don't even know what the deal is. You know, we don't even know what the deal is. Like, is it good for America or bad for America? What concessions is the U.S. making, and what concessions is China making? You know, apparently trade wars are not that easy to win. Can you review BA? Yes, BA. I'll be talking about BA. Actually, I flew on a Boeing 787. I double checked that just to make sure, but I think they grounded the 737 Max 8s. But I was like, before I get on the flight, I should just double check just to make sure. Like, well, China, Boeing does make a lot of their airplanes in China. Airbus is I actually flew on an Airbus as well yesterday. Airbus is like Boeing's Chinese competitor, and now you can say what you want. You know, some people say that, you know, China stole the plant. You know, whatever. You know, the big problem is that China steals a lot of American IP, intellectual property. You know, whether from Apple or from Boeing or for Airbus is French, from whoever, you know, and probably soon from Tesla when they open the plant there. But, you know, what are they going to do about it? Isn't there a Chinese competitor to Boeing? Let's see here. Boeing, Chinese competitor. No, I think, let's see here. China. Looking here, China. I guess it's called Commercial Aircraft Corp is what I was thinking about. Sorry, I misspoke. Thanks for correcting me. Seriously. It's easy to get confused here. Commercial Aircraft Corp. They make the C-19 passenger jet. The C-19. Hey PB, how you doing? So the Commercial Aircraft Corp. C-19. But before we get into things, I did do some trades today. Kind of went in pretty slow and low. We'll talk about it. I only traded a little bit on my Tasty Horse account. I didn't go too crazy about all across all accounts or anything like that. You know, definitely didn't want to, you know, go crazy. You know, when you come back from a break, you don't want to be like, oh, I'm just gonna go in. I literally had 0 positions open this morning. I had 0 across my accounts. I had nothing going on. Came back in, was relaxed. looking at what the market did over while I was gone, looking to see where I thought it was going to go. Hey PB, thanks. Hexadecimal. I guess we'll see, but I mean, the fact is, China steals a lot of IP from the companies we manufacture there, from Caterpillar, from Boeing, from Apple. The people that manufacture in China have a lot of problem with that. Dariano, what's going on? So today I opened up a position on Microsoft. I still have that position on. I opened the 116 put and the 120 call here. And Microsoft, if you guys don't know, hit new all-time highs today, hitting 118.44. You know, had a pretty incredible rip while I was gone, from 108, 109 area all the way up to 118. I mean, a $10 run here. Really nice breakout above 112 area, and then hit new all-time highs today. But so I actually put on a bearish strangle. So I have the 116 put and the 120 call. And what was interesting about this is, even though when I put it on, let's see, what time did I put that on? It was at 10:05 a.m. So at 10:05 a.m. we were right in here where it kind of double bottom right here at 10:05. So I was on this candle, it double bottomed. It was like 117.30 something. It was going back up. I scooped up the strangle, the 117 put, the 120 call. But the weird thing is, even though it was going up, my puts were inflating, because meanwhile, when things were going like this, VIX was also going up, you know, at 10:05 at the time. And it was some really weird price action. Same with AMD. I put another strangle on AMD, which is it's entirely different, but you know, Microsoft was going up, so I paid $1.23 for it. Currently down $4 on it, so basically break even, give or take. So it's worth like $1.19 right now on Microsoft. However, after hours looks like we're below 117 right now, 116.96. So, you know, my target on Microsoft was to get back to like the 115, the 115 area, just kind of come back down here, 115. If it hit 114, better, but 115 is my initial target on this. You know, it just went up really fast, really quick. So I was playing the bear side. It looks like we're having some two-sided action as back. If I was looking at the other day on Microsoft, it went up from 114 up to 117. And then it got crazy at the end here, went from 116 down to like 114.50 back up. It closed at 115.90, so it's good to see some volatility in the market. However, if you're looking at VIX right now, you know, we declined all week last week, and then today it hit this 1375, 1380 area, which it did yesterday as well, and kind of came down a little bit, but it's currently holding. So definitely pretty interesting to see what's going on here. Looks like we're having some more volatility, but that's to be expected, being at like resistances and support. So some say we're at support, others say we're at resistance. So that's the nice thing about the market. And then today I also did an AMD trade. I did at 12:30. As you can see, I like really spaced my trades. I really spaced my trades out today. I wasn't trying to get into anything quick. Baron, appreciate it. I wasn't looking to get into anything quick. I was just kind of go really slow, low, do some small trades. Yeah, you could have made a lot of money today, but you could have lost a lot of money today. And I was like, well, my first day back here, we're not going to be like getting too out of hand here. And also, I'm gonna talk about what I did while I was gone in terms of getting my mental state and emotional state and everything back under control for trading. But AMD, Matthew, appreciate it. AMD, I put on at 12:30. I got the 24.50 put, and as you can see, all these are all 10 days out. So I'm not opening up anything for this week. I'm going 10 days or more out. just trying to not play the intraday, more bigger picture here. So for $1.03, I got the 24.50 put, the 26 call on AMD, and AMD was up almost 12% today. You know, hit a high after hours, like the close at 26. It hit a high of 26.15 a little bit ago, right after close. Right now it's at 26.10. And the reason why I took it off is because I sold that same for $1.30. So, you know, we made like 25%, something like that, which is pretty good for a couple hour trade. You know, I opened it at 12.31, closed it at 1.51. The reason why I closed, like, well, why wouldn't you hold it if you had the 26 call? If you had the 26 call. And what I was worried about is that I had the 24.50 put and the 26 call. Since we had such a big update on AMD, if it came back a little bit, yes, I had a lot of time, but I felt like I needed to take profits and realign my strangle. I am the proud new owner of AMD stock as of about a month ago. Nice, congrats, Matthew. So what I did was I took that position off, and then when it broke above 26, I bought the 25 put for the same expiration, next week expiration, 10 days from now, March 29th, the 25 put and the 27 call for $1.18. So right now on AMD, if you're playing the chart, like the 1 year chart here, yes, it did break above here, and it looks pretty strong. Closed, you know, we're closing the gaps and all that. You know, this could either go, I would say, you're pretty good to like around like 28, or it could revisit the 24 area. So that's why I wanted to realign my strangle. Like, if it took more time to get there, I didn't want to lose the dollar that I paid for it, just waiting and waiting and waiting, because it could easily consolidate in here. Like, if you're looking like in here, it went from 22 up to 23, back down. It only swung like $1 range, so that's why I wanted to realign my strangle on that. Abel, congrats, right back to the green. So, you know, nothing. My gains today were not like anything to write home about, but you know, the one thing I will say is that we played it safe. We played it the way that we wanted to play it, and you know, we have some good entries on some good positions. You know, I feel like we have a good position on Microsoft. We have a good position right now on AMD, and we're just gonna see what happens. We'll talk about some of the other stocks in a second. The one thing that I do want to touch base on is, you know, when I went on my break, you know, I was definitely burned out in terms of how many hours I was putting into everything. That includes everything that I do. And, you know, I was working 12 to 15 hour days, sometimes longer. Like the day before I left, or was it the two days before I left? Either way, like the day before I left or 2 days before I left, I literally worked from 5 in the morning to 1 a.m. pretty much nonstop. Yes, I got dinner and stuff like that, but hey. But the one thing that I want to say is about trading is getting your emotional state and your mental state like under control. It's very important. I don't know if anyone here, one thing that I did over break was I got back. I've read this book before, but I read it again on the break when I was gone to Mexico. Has anyone here read The Intelligent Investor by Benjamin Graham? I did highlight some things for today's live stream, so I just wanted to kind of go over that with you guys. Some of the things that it's not that you have to learn it. It's like sometimes you need a reminder. Is like, you know, why am I doing certain things? Or is it good? Is it bad? Yeah, PB. It's a tough read. So I'm gonna some of the things, and like I was thinking about, like, you know, why did I start Us Versus Herd? Why did I start this channel? Why did I start like trying to build a community? Why did I start trying to connect with other people? Like, I took a lot of time to self-reflect, see where I was at emotionally and where I was with, you know, with trading, along with Us Versus Herd, what it's about. Am I staying true to what it's about? Am I, you know, going down a path I didn't want to go down, or what's the case? is. So, some of the things I will find very interesting in here, like the thing about the intelligent investor, it has the us versus herd mindset. So that's why I wanted to show you, read to you some excerpts that I have in here. Drukpa, it's by Benjamin Graham. The one thing I'll say is this is about becoming your own worst enemy. It says the investor's chief problem and even his worst enemy is likely to be himself. The fault, dear investor, is not in our stars and not in our stocks, but in ourselves. This has proved the more true over recent decades. It has become more necessary for conservative investors to acquire common stocks and to thus expose themselves willy-nilly to the excitement and the temptations of the stock market. And a lot of the times I think that we like what he's saying here is like we're our worst enemy, and that like if you're looking at like price action, we'll just take just because I have this chart up, people got really excited about AMD going from 9 to 20, went all up to 34, and now we're kind of going up there. Now we've had, we had a crazy bull run, but if you guys know that there's a lot of FOMO, whether it's like cryptocurrency, you guys see what happened with that, whether it's the stock market, whether it's stocks in the 2000s, whether it's now, like stocks go up to an unreasonable value, but also when things sell off, they also sell off to like an unreasonable value as well. So where the stocks right now maybe are way overvalued, they could also fall where the stocks are way, undervalued. Let's say if AMD went down to, let's say in the next year went down to $1, would you be a buyer of AMD or not? Well, depending. I mean, you wouldn't, it would then be a penny stock, but you kind of get what I'm saying. Like, so, the FOMO is that people, are chasing. And I feel like in options, it's very easy to chase, and then you end up in a bad position, Let's see here. The other one, it says here, being patient, disciplined, eager to learn, you must also be able to harness your emotions and think for yourself. So there was a lot that I read that which Benjamin Graham identified here, which I've been talking about for a long time, is controlling your emotions and in your trading. Elu, what's going on? Now, there's a couple good ones here. It says there is intelligent speculation and there is intelligent investing. But there are many ways in which speculation may be unintelligent. Of these, the foremost are: 1, speculating when you think you are investing. And 2, speculating seriously instead as a pastime when you lack proper knowledge and skill for it. And 3, risking more money in speculation than you can afford to lose. So like this paragraph I think really hit home to me, because there's a lot of people here that they lost a lot of money. Let's say there was a lot of people that were pretty regular on this channel, and then January and February they blew up their account. So what does that say? What does that say about, not saying the person's not smart or not saying the person isn't going to be good at it, but they risk more money than they could afford to lose and they couldn't trade. So like when I'm trading, people are like, hey, why do you trade small amounts? Or why do you trade one contract at a time? Why are you trading 2 contracts at a time? Why don't you just like do 10, 20 contracts, load up on Amazon or AMD or whatever the case is, and go for it? It's because when you're trading for, it's a stream of income. When you're trading, it's a stream of income. It's a business. You have to have money. Money is your product that you need to have. If you don't have money in your account, if you just blow it all in one trade, which you could easily do, you're not going to be able to trade. Are you able to, if the market goes against you, which how many times here have you put a trade on, you're like, man, I was really surprised that the market did that. I had no idea. Like, it's like almost every day. You know, it's like every day you're like, wow, I didn't think AMD, like people today, wow, I didn't think AMD was going to be 12% today. I mean, if they did, I mean, you wouldn't have these calls up. These calls right now are up 5,200%, 3,000%, 1,000%, 5,000%. You know, people, if people knew about that, if people knew like AMD was going to move 12% today, they would have been buying by the boatload. But then the pricing on the options would be so overpriced that you'd probably make like 50% instead of the 5,000%, right? So, there's also this other part about analysts as well as in February 2000, hedge manager James J. Cramer, which now today is known as Jim Cramer on CNBC, hedge fund manager Jim Cramer proclaimed the internet-related companies are the only ones worth owning right now. And this is in February of 2000. Think about that, okay? These winners of the new world, as he called them, are the only ones that are going higher consistently in good days and bad. Cramer even took a pot shot at Graham. You have to throw out all of the matrices and formulas and texts that existed before the web. If we used any of what Graham and Dodd teach us, we wouldn't have a dime under management. So, hedge fund manager back then, he was a hedge fund manager. He didn't have his, you know, as we know him today, Jim Cramer, Mad Money, CNBC, the whole bit, whatever. You know, that's why you got to be careful about analysts, or, you know, when people upgrade or downgrade, or whether it's Citron or Jim Cramer talking about stocks, or me, you know, whether I say I like a stock or don't like a stock, it doesn't really matter. It matters what you think. It matters what you did, because what happens is these people with a platform, they go down this path where they're preaching that, you know, oh, the tech stocks, they're doing amazing, you know, 1999, 2000. And we all know what happened when the stock market crashed. I mean, the stock market, we talked about this like before I was gone. The stock market lost 50% or more of its valuation. Some tech stocks lost 99% of their value, 95% of their value. And he's saying, you know, throw everything out. You got to be very cautious when people say, hey, throw everything out that you know it's no longer true. It doesn't really matter anymore. Just invest in web stocks, invest in eBay, invest in Amazon, invest in all these things. But back in the day, back in 2000, if you weren't aware, if you were too young or whatever the case is, there were a lot more internet companies on the market than there are today. So being able to choose the Amazons and the eBays from, you know, whatever they had, diapers.com or dogs.com or whatever the case is, you know, they had hundreds of these companies that went from $1 a share to $100 a share, and then they went down to zero. You know, and it was very hard to understand, like back in the day, like which stock is a good stock, which stock's overvalued, which stock's undervalued, what stock's gonna make it. Like now we know eBay and Amazon, those stocks have made it through the fire. But how would you have known, you know, when you have all these tickers, these brand new IPOs, all these tickers, you know, and right now we have like the opposite problem where companies are not going public. You know, where IPOs have really shrunk down. The number of IPOs that we have today is only a fraction of what we used to have. There's not a lot of companies are going public right now, you know. And back then, you know, he was saying, Jim Cramer was saying, you know, throw out all the formulas that existed before the web. It doesn't matter anymore, which, you know, I think is very dangerous with the us versus herd mentality. Is like, don't worry about it, just buy, follow us into the abyss, and we're good to go, you know. And none of it really matters. And then what happens when the stock market collapsed? What happened to Jim Cramer's fund when the stock market collapsed? And they were so heavy on the tech stocks. So I'm just saying, like, you know, the us versus herd mentality is like, don't look too much into the news. Don't look too much into the analysts. It's good to have maybe their opinion. Maybe it's good to have my opinion. Maybe it's good to bounce ideas off of each other, which I have no problem with. But when those people start to persuade your thinking in terms of your core thinking and what you believe, then you have to really think, like, you have to really start thinking for yourself, you know, just like anything. You know, when you go vote, you want to vote because you believe in those beliefs. When you buy a stock or you trade options on a stock, you want to trade options on there because that's what you believe is going to happen, not because, hey, Nick said that Microsoft is going to go below 117. I'm going to do it too. That's not a good enough reason. If you never traded Microsoft, you never traded that. The reason why I traded these stocks is because I've done it. I've traded Microsoft. I traded Andy. I've traded a lot of these stocks. The stocks that I trade, I've traded hundreds or thousands of times. You know. So when it comes to trading, it comes to investing, you want to do something that you believe in, also something that, otherwise you're just speculating without a plan, those are a couple of points. I won't go too much longer here. Those were a couple of points that I wanted to talk about, of things that I was reflecting on, and how, yes, PB, I agree with you. The book is a tough read due to the way they speak English. The way it's written in like an older form of English and not really the way that we talk today. But the context, the information is there, and it definitely really helps me bring me back to my mindset of really what I do, why I do what I do here. Why do I trade the way that I trade? And I really have to stick to that. It's really easy to get off path when you're making money. It's easy to get off the path, and when you're losing money, it's easy to get off path. So you kind of like, every weekend you got to go to church to get right. You know what I mean? And like this is, reading, reflecting is kind of like what you need to do. Meditate is what you need to do to get your mind right for the market. You have to be prepared for Monday. You have to be prepared for Tuesday. You have to be prepared because if you don't, as you guys know, the market doesn't care about you. The market will eat you alive. The market wants to take your account from 1,000 to zero, 5,000 to zero, 10,000 to zero, $100,000 in your account to zero. It doesn't care. It wants to drain it. It wants to empty your account into theirs. How do you tell by stock up or down each morning? I'm not sure what you mean. Are you talking about like pre-market? I mean, the pre-market, I watch the futures. As you can see here, I have /ES, which is the S&P, /YM, /YM, which is the Dow, and /NQ, which is the NASDAQ. I watch futures a lot. But in trading options, I don't really, unless I'm going to be rewarded in a big way, I don't really pay too much attention to pre-market and after hours, because a lot of that changes once market opens and the volume really kicks in. But there was some monster volume here on SPY and Microsoft, and at the end of the day, I mean, Microsoft saw like 9 million volume right here at close, and SPY went up to about the same on the 15-minute chart here. Harish, I track MD every day. I missed it. It happens, man. Well, based on where the price is, I think you'll get the opportunity again, but the calls and the puts are a bit more inflated just because we had the expanded implied volatility. Also, VIX went up. When VIX goes up, it makes everything more expensive. But I was actually really surprised that while I was gone, we actually hit down to 1250s. Today we even hit 1237 on the VIX. It was nuts. But yeah, let's talk some stocks. I think. I don't know. Fajardo, are you here? You want to talk about GE, and Nelson wants to talk about BA. So I know Nelson's here because he just commented. So let's talk about Boeing. Yeah, Boeing is in trouble. It's their. As more information comes out about those crashes, Boeing is becoming increasingly more liable. You know, and thankfully there was only in the U.S. How many of those planes were grounded? Like 13, maybe 15, something like that. So thankfully it wasn't a big issue currently. I think the issue is in the future. Okay, are people going to cancel their orders of those Boeings for their future plans and move to a competitor? Does that have such a bad name to it now? Like, you know, like when the Samsung phones were exploding, they actually had to just end that model and move on to another one, to scrap it, said forget it, we're gonna move on. You know, is that what's gonna happen here? You know, Boeing, as more information comes out, you just gotta be very careful with Boeing, because it may look, yes, it went up a lot in the last couple of years. You know, it's more than doubled, but you have to understand that this is not only are they liable for the tech stuff, but this is also a huge PR nightmare, not only for Boeing, but for the airlines that are buying these. So let's say, you know, American Airlines, let's say they ordered 50 of these, and then United Airlines ordered 50 of these. You know, as us, the consumer, going to want to fly on these planes that have crashed due to software problems? You know, I mean, honestly, I was feeling a little bit like, I don't get nervous when I fly, but it's like, well, I would prefer not to be on a Boeing 787 MAX, you know? Do you guys buy only options or both stocks and options? We mostly trade options here. I don't trade stocks. I invest in stocks that I hold for more than a year, 5 years. Grub. So that being said, I would right now, for me, I would be trading Boeing to the bearish side, even though it looks to have leveled out here. But every pop just gets dropped. Pop, drop, pop, drop. They have a big problem, but for me, I'm not going to be trading this, because for me, I don't really trade scandals very well. So what I mean by that is, like, some people do, some people are great at it. But for me, you have to identify, like I talked about, you have to identify your strengths and your weaknesses. Like the Win sex scandal, I didn't trade very well. The Equifax data breach scandal, I didn't trade very well. I just know for the way that I trade, I don't trade those scandals very well, because I trade better when I understand the value of the company. And those and scandals, they don't care about the valuation of the company. It only matters of what's happening right now and news-based events. Like if something happened to Boeing, and when there's bad news like this, sometimes it keeps rolling in over the next few months, and you may be holding, maybe it's consolidating, and then one bad news report gets smacked down and you're in big trouble. The one thing that I will say that's pretty good here is implied volatility is getting crushed right here. So it might not be a bad idea for a strangle if you're going to play it. If you're going to play it, maybe more of a neutral play. But for a strangle, it gets expensive. So now that implied volatility's got crushed, option sellers made some money. If it moves back down to 360 or tries to make its way up to 400, you'll be getting a better deal on a strangle right now. Sovan, what's the indicator I have up? This is implied volatility. So you can see right here, I got the implied volatility graph here. So it helps me understand where implied volatility is for the stock. You know, on Tastyworks they show you the number. They show you the number up here, which I think AMD is wrong. I don't know how it could be like 3.4. Well, let's go to like GS. It's at 23. MU is 44. I like that this graph here shows you kind of how it's inflated and kind of how it's contracted, so that way you can make a good assumption of, hey, am I going to put a trade on here and overpay? Maybe I should be selling options versus buying options, that kind of thing. Now, I mean, this could have easily also gone from 44 up to even higher, 50, 90, stuff like that. But you just gotta, it helps for me, I'm more of a visual person. It helps for me to visualize what's going on. Sammy, what's going on? I'm back from Mexico. Glad you're here. Grub. Let's take a look. So if you're a visual person, it helps to have those indicators up so that you can visualize. That's why I like Tastyworks for me. Instead of having to do the math all the time, it was a game changer for me on Tastyworks. I still use a lot. You know, the orange bar here indicates the plus or minus expected move with the options of pricing in it. Definitely really helped me out in terms of placing options. And I mean, you could do it in Thinkorswim. You just have to do the math manually, and it's way slower. So you know, if you were buying something like this, you're like, okay, well, I'm outside of the expected move. You may want to do something more like this if you wanted to be, you know, within the expected move. And especially like selling options like an Iron Condor or something, you know, you'd want to do something more like this where you're outside the expected move, and then you can kind of wear it down. Not saying this is a trade that I would do, just showing you that in terms of being visual, it's what I prefer. Tone, what's going on? If you're new here, say what up. We're just going through some stocks. Grubhub is reaching, or it's coming back down to the 52-week lows here. 52-week low earnings was 66. I don't know how these options are trading here. They do have some decent volume. Tone, what's going on? Glad you're here. I was gone about a week to Mexico, so my first time back. Cut me a little slack if if I'm not as on point during this live stream as usual. But yeah, some good volume on this. Let's see here. Next week, not so good. Let's see the monthlies. How are the monthlies looking? Monthlies, I would say. So it looks like there's only volume on the weeklies, but I don't think I would really trade this week's on a $70 stock. How much is up? Puts her up like 200 to 1,000% here. But there's only like 38 volume on these, 600 volume on these. I think it's tough. I think this is a tough trade. You know, when you're looking at options to trade, not only do you want liquidity, but you want people to trade these. You know, you want liquidity, and you want, you know, the bid and the ask is like 30 cents. It's pretty wide. You know, you need volume to create markets. Yes, it could drop to 60. You could make some money, but to put, like, let's say a safe trade on here. Let's say even if you were selling options, like any sort of spread, you're gonna have a hard time putting like a vertical put spread on, just because it's kind of wide. You're gonna overpay for these. The market maker is going to make you come to them. It's going to be hard. Yes, there's money to be made in here. Look, I love the chart. I just don't like the product. I like trading these 52-week lows. I just don't like the product. Below 20 is a good IV. So IV is just an indicator. Implied volatility is just an indicator. You know, when it's low, it just means expect low volatility. When it's high, expect high volatility, right? And the thing is, that number is for right now. It doesn't tell you what's going to happen in the future, right? So when you're looking at implied volatility, that's what's happening right now and what's happened in the past. Like you're looking at Grubhub right here. This is the implied volatility right now. This is what's happened in the past. They don't give you any indicator of where it's going to go. Is this going to come back up here to 80? Is it come back down to 30? You know, what is it going to do? So, you know, you have to use your own judgment if you're going to make a trade on where you expect implied volatility to go. Is implied volatility going to expand, or is it going to contract? I mean, it could easily go up and then come back down. I mean, this was earnings. This is our earnings. Let's see if we could find something else. If we could look here, you know, implied volatility went up and then it went pretty much straight down. So and then, you know, it had a, well, what's dangerous here is it went from 90 down to 74, and then literally just kind of chilled here. And that's when implied volatility contracts. So just because something moved up a lot or moved down a lot or moved a lot that day doesn't mean it's going to continue. Implied volatility could easily contract tomorrow and the stock could not move. And then you're going to be out a lot of money. So implied volatility, just like any other indicator, such as RSI or anything like that, you have to use your own judgment of where you think that indicator is going to go. It doesn't mean where it is currently is where it's going to stay. It's definitely not going to stay where it's at. Is it going to go in your favor or not going to go in your favor? FC, sorry. Kind of ranted there. What I do like about Apple right now is that it did get above this resistance here of 184. Next resistance is 190, 195 area, right? 194, which I think is good. It gives you some room to play with. What I do not like is on Monday, I think it's March 25th, right? They're expected to have a product announcement of their new streaming service. So they could have some surprises in here, but this is what's kind of been leaked already. What's expected is they're going to announce their new streaming service. They're also going to announce updated AirPods, updated iPads. That's what I know that has been leaked already. But the streaming service is a big one. It's a big game changer. Oftentimes what happens is Apple stock runs on speculation of the event and then goes back down. Like a lot of the times it goes up in anticipation of the event and then sells off afterwards or even during, and people are like, I don't understand what happened. You know, they just announced all this stuff. The stock should be going up. When that's not, it doesn't really matter what they announce, right? It matters what happens with what they announce. So I'll repeat that again. It doesn't matter with what they announce. It matters what happens with what they announce. So they could launch the streaming service and the stock runs up beforehand, but then on next quarter, when they release those numbers, like, man, the streaming service, we didn't do that great. Not that many people signed up. I couldn't believe it. We have this great platform nobody signed up for. Or it could be, man, it's incredible. 3 months, 100 million users. It's amazing. People love the content. They're adding a whole new service. So it depends on, are people loading up beforehand, or is it just going the way it's being? I mean, Microsoft's been ripping, Apple's been ripping. I don't like that Apple has an event coming up on Monday that could impact the stock price. I mean, if they didn't have that event that was doing that, I would say, yeah, man, clear sky is 194 easy. But because they have this event and the nature of what they're going against, I mean, they're going to be competing against Netflix, Disney, and Hulu. I mean, everyone's competing in the streaming space, but the streaming space is incredibly competitive, and it's also a money suck. I mean, look at how much debt Netflix is in. Look how much money it costs Netflix to run, and they literally charge $9 or $10 a month, $11 maybe. I don't even know. It's like Netflix. If Netflix is making people cut cable, like they're saying, like cut cable, join Netflix, or do this, or cut cable. Cable was costing people $100, $150 a month, and they're charging $11 a month. They should be charging $30 to $50 a month and covering the costs. But instead, they're trying to build their user base, get more people to sign up. So their Wall Street is valuing subscribers over dollars. Now, you could decide for yourself if you think that's right or not. So far, it's paid off. But what's going to happen when their subscriber base levels out and they're not making any more money from them? You know, companies need to post profits. Like Apple, it's a profitable company. Netflix, I mean, they have a lot of debt. Tesla, same thing. They have a lot of debt. They lose money. So you have the 190 call, 185 put. Well, I hope the FC. I hope the 185 puts expire. Well, they're expiring this week, 322. Well, in that case, I mean, for you, it's gonna be tough. I mean, Apple did take a $3 dip today, but hopefully, you couldn't get out of the FC. You couldn't get out of the 185 puts today for a profit. I mean, I would hope that would revisit the 184, 183 area for you, but I don't know if it can do it by Friday. It might just chill. It's been running hard. It's been running really hard. What happened at the end of the day? The guy was doing so good. Just volume picked up, Matthew. Volume. CMG. Yeah, they were $10 probably. I should take them off. Yeah, I agree with you. CMG's just ripping. I don't know if today was news related or what, up another $10. I mean, it's just starting to break out because if you guys, they had all that bad news with the people getting sick of the restaurants. Now it's just trying to get back up to all-time highs. Street Prada, yeah, thanks, man. I was in Mexico, so my first stream back. If you guys missed the earlier part of the stream, I did drop some knowledge if you guys care. If not, we're gonna carry on. You know, this was their stock price before people got sick in the restaurants, and then it literally went from 758 down to 388, hit a low of 247. But this take a couple of years, but now it just seems like a lot at once. I mean, from 378 to double in like a couple months. I mean, it's a lot. It's a lot. However, you could have said that, hey, their company was undervalued but it looks like people are now returning to the restaurants and people are still looking to spending more money, or spending money in the restaurants now. So that's what I was talking about earlier, where companies become undervalued to a point where they're way below value just because they kept selling off, and you know, the herd just kept selling it, and then, you know, people are catching some FOMO, and maybe it's going to go up to 800, 900, maybe even 1,000. You know, maybe could. But are those people investing? You have to think: are people investing in this right now for speculation or FOMO, or are they doing it because of how the business is doing? You got to think about that. But right now, I mean, it's hard to evaluate companies right now because we've gone up for so long. We haven't had a decent reset. I mean, we did go down last year. We had a little bit of a reset, but nothing. We weren't down that much. The rise was still intact. I mean, SPY was still above 200, still above 230. You know, started 2016. We're at like 225. Oh, yes. Baron, I think did we look at Smartsheet like before I left? I remember something about this. Are you trading the stocks in here? Looks like some volume picked up on the April's. May doesn't look very good, but does look like the one thing I would be cautious about is the strikes, $5 wide strikes. Not good. The bid and the ask is actually not that bad. Like the puts here, the 40 puts, 5 cent wide. That's actually pretty good, but there was 1,100 volume on those. Yeah, they had earnings. When did they have earnings? They had earnings today. So that 48. So they're just ripping. So I had a little bit of reset. Ran before earnings, a little bit of a reset before earnings here. Now we're at 40, hit 48.96. It's at 40. It's like 48 right now. So it's right up here. So, You know, the thing about all-time highs is they can continue making all-time highs for the foreseeable future. You know, the way I would play this, if I was going to play it, you know, you would do like a bullish strangle. You would do probably like right now, you'd probably like do the 50-40, but that's really wide. You do have 30 days on it though. So depending on what that comes in at, if the pricing can contract here after the move, depending on how much it went, how much it goes up tomorrow. If the pricing on the options can contract, you might be able to find a good deal. But just keep in mind, the $5 wides are tough. But you do have 30 days on it, so you could make it work. So we'll see what we can keep an eye on. I'll keep an eye on it tomorrow and kind of see if there's a trade there. So I'm not saying it's a bad trade. Just like if you're new to trading, it's not something that you would want to trade. If you're just getting into it, you have to kind of know what to look for. You know, kind of things that I went through. You know, just don't buy random strikes and hope for the best. You kind of have to put some thought to it and some strategy behind it, because you don't want to just get stuck with some $5 wide strikes and they just bleed you out over 30 days and you lose your money. Like you do 10 contracts or something weird. That's why like on stocks that you haven't traded before, you really just want to go kind of small, 1 contract, 2 contracts, or whatever risk you want to do. But like, even if you have a lot of money in your account, don't do like 5 contracts, 10 contracts, do like $1,000 on it. I've only traded it once before. So yeah, you just got to be careful. So we got about 5 minutes left. If the video was of value to you so far, hit the like button. If you, I definitely appreciate you guys joining me for my first stream back. Definitely appreciate you guys showing up like you guys did. I was like, okay, well, might be just like three people wanting to watch me if you moved on with your life. But I'm glad you guys are here rocking with me, talking about the market. Well, Drucka on a $50 stock or $40 stock like SM like Smartsheet here. $5 wide, you have to think about that. A $5 wide strike is 10%. So the stock needs to move 10% for you to kind of, to have some leeway there. So even 250, a 250 wide strike is 5%. So you want on this minimal, you want like a $1 wide strike, or even like 50-cent wide strikes would be ideal. 50-cent wide strikes would be ideal, but if you can't, like a dollar would be way better than $5 or 250. So I typically wouldn't trade like a $5 wide strike like that on a $50 stock, $48 stock. Peter, I'm good, man. Shri PLNT. Planet Fitness. So yeah, this is a Drucka. This is a $70 stock, and you can see these are 250 wide strikes. So the reason why they have only certain strikes available is based on demand. The more volume, the more strikes they create, because it creates more opportunities for them to make money on trading fees and stuff like that, based on how many strikes you provide. But if it's not that busy, they don't have that wide strike. So this is not, they have monthly expirations right now. They have 250 wide strikes on this. I do not want to go there. But yeah, I mean, the way that I play 52-week highs, because oftentimes they keep breaking them. Like here, flattened out, broke above, kind of flattening out, trying to break above again. So, 52-week highs and 52-week lows, it doesn't mean that it's going to get rejected at that point. It also means like less resistance. So if it's at 52-week highs and it's pushing through and it keeps pushing through, I mean, that's how, like in 2017, how we got so many all-time highs is because we kept going up, 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 because there was no resistance. There was nothing holding it back from going up. People were just buying all they could, Baron, I went to Mexico. So, anyways, definitely appreciate you guys. Been an hour. If you're new here, like the content, hit subscribe. Glad I was hanging out with you guys. Love hanging out with you guys. Did you have a video on how to find stock to trade options? Yeah, we have a lot. If you search the channel, I did have one about scanners and stuff like that. Go ahead and search for it on our channel, man. If you guys have more questions, you can join our Discord or our free options trading group on Facebook. Daniel, you look like you got some sun. I did. Went to Mexico. So you guys take it easy. Stay safe, stay green. It's always us versus herd.